Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, April the 13th. The year's 2023. Let's talk trading. Preparing to trade. These videos are for educational purposes only. Your results may differ from mine. We talk a lot about trading, and we've talked, a lot about the psychology, and then we go over methods and indicators. But, every now and then we talk about preparing to trade. What is it you do before you actually trade? Now, there's a couple of things that we can discuss. And I'm not necessarily talking about, looking at the charts preparing to trade, but I'm talking about the whole thing. In other words, do you get your coffee, your morning breakfast, a snack, whatever? You make sure your area is clear and clean. Do you do some meditation? All those different things are part of preparing to trade. Maybe you scan a few websites, look at the news, look at maybe pre-market in the stock market, futures. There's so many different things that you can do. But the question is it a routine? Or is it just kind of, well, some days you do some things and some days you do. There's no set, because you really need to have a set preparation. Just like you need to have a trading plan. Maybe you need to have a preparing plan, we could call it. So what it is that you do, because I know I have like little 3x5 cards, and sometimes I read them, sometimes I don't, because I've been doing this for decades, so a lot of it's burned into my brain. But it's good to review every now and then. One of the things I look for is there going to be red news? Because the last thing you want to have happen is not to know there's red news, to be in a trade, and next thing have it spike against you, 20 to 50 or more pips, and just, wipe you out. Literally, you could be putting a trade on, you could be setting your stop loss, and you could be in the process of setting your stop loss, and price blows right by it. No, that hasn't happened to me recently. But I just, it just reminds me of some things that have happened, and you have to look at it and laugh. So maybe you guys can put in the comments some of the things you do to prepare to trade. And that way, it's always good to see what other people do, because they might do something that you weren't doing. It's like, hey, that's a good idea. Or you get confirmation on the things that you are doing. Because that's part of the learning process, is to see how others do. So let's go ahead and take a look at the charts. But as always, remember, never lose any more on one single trade than you're willing to lose. And that's your risk management. And the huddle. Haven't looked at this in a while. You have to decide what you're going to do. You kind of huddle with yourself. Okay, monthly chart. Looks like we're up for the month. Down to 25.02. I should have been short at 7. Dang it. I was trading right before I made the video. All the gaps filled. Daily's green. It's kind of hard to want to go short against all this green. But you can see here we're in the upper wick zone, which just reminds me I need to do something real quick. So I'm going to pause the video. As I was saying, it is kind of difficult to want to go short when you see the monthly, weekly, and daily are all up. That's definitely swimming against the tide, so to speak. But sometimes there's a reason to do that, and one of the reasons might be, it's like, hey, we're in this upper wick zone here from a few days ago. beginning of the month, and so price just might want to come out of that upper wick zone. We'll just have to wait and see. And for the year, 413 pips above the open. And you see we had an inside bar 6 days ago. We broke that. Now we're back inside. Only 53 pip range, so range needs to expand. We're somewhere right in the midpoint during the day here, about 3, 2, maybe, yeah, we're right around the midpoint right there. So price could go either way from here. Notice on the H1, you see here we fell out of this upper wick zone a couple of hours ago. Then we fell out of that upper wick zone. We haven't even approached that upper wick zone yet. So you can see here, since we're trading intraday, not looking to hold, for days, that's why might be considering, or why I was considering going short. I think I mentioned I should have been short at 7, and this one opened at 5, so as you can see here, it was dropping. Range is large enough, but there's not much room between the two rat zones, as you can see here. We hit R1, pivot trading plan said short, Bambino Flex said long. Price near pivot. We haven't been near the pivot yet. Maybe we'll head down to it. We do have some red news coming out at the bottom of the hour, so you might want to pay attention to that. So today we have a missed pivot. The week's been taken out and the month's missed. So interesting happening. In and out of that upper wick zone, both sides here. See, barely broke out and then broke to the downside, then came back. And let's see, it looks like we've got a flip-flop box happening right here. Higher, low, lower, high, scalper. Indicator 2 dots are all. And this is interesting. Something looks real interesting on this chart. I'm not sure what these dots are. Huh. I forgot what these dots are. Looks like they're in the mid dots indicator. What did I turn on? Oh, higher, low, lower, high dots. That's what they are. You can see here we broke out of that box, 3 pips to the north. Nowhere near the ATR zone. We had a high 2 hours ago and a low 6 hours ago. And it looks like we held the double O. Price didn't break it. I think it wants to break it. Actually, yesterday in one of my accounts, I knew we were going to have some FOMC action. So I had put a short on at 2,500, or a pending order there, and another one at 25.25. Well, by the time it was all said and done, and before I went to bed, I said, you know what? I'm just going to take those pendings, and I just killed those pending orders. Well, you can see it hit 29, so it would have triggered my trade at the 25 and at the double O. And overall, even if I just woke up right now, I could have exited with a profit, a 9 pip loss, and what, a 16 pip gain. So overall would have been profitable. But sometimes it's better to take trades off than to leave yourself exposed, especially if it doesn't happen when you think it should happen. Looking at the state change here, there's a nice break of the previous M5 high for 4 pips. And this is what I was thinking. I put together an indicator yesterday. It'll be coming out, probably not next batch, maybe the batch after. I got to test it and see. I'm doing a body wick count. Now, why would I do that? Well, yesterday I put on a trade and it inflected on me, and I'm thinking, what am I doing wrong? What am I not doing right? Let me look at something. Well, I had put a trade on when it was in the lower wick zone and I was going short. But had I looked at all of this information, I probably would have said, no, might want to go long there, because it's like, how many times, like this current candle, you see it's above, out of the last 100 candles, it's above 55 of them. It's in the upper wick zone of 5 of those candles. Green body candles, it's in other words, if you have a line going across, 3. Red body now 3. Lower wick zone 5, 6, 7, and below 18. So what does that tell you? Well, it kind of tells me it's going up, or it might, and as you can see, that's what it's doing. Especially you got a 3 ball here, you want to look to go long, and in this particular case, 3 ball, this candle closed bullish, so look to go long, and that would have been a nice little trade. So once again, that indicator is going to be called the body wick count. I thought I had done something similar to this earlier. I got to go back and look at all the indicators I put out. So, fellow traders, what do you do to prepare to trade? Because it's important that you have a routine before you actually start trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.